I hope you guys doing well. It's been long time. I have not talked with you guys, but this is a swing trading webinar about the topic is mastering high probability trade with the risk management. About me, I think everyone knows, but I think for the new people, I'm a software engineer currently staying in Netherlands. I'm married, have twins girl and one 2 years old son. I started my trading journey in crypto in 2016. So more or less, I've been involved in the market since then. So it's more than 10 years I've been involved into the market. Stock market trading, I started in 2023 end. So almost at 2024. So I would like to, before talk about the swing trading, I would like to talk about the market cycle. So every stock goes into the typical market cycle phase, called as accumulation, trend phase, and distribution phase. Also, there is another phase called as a reaccumulation phase. So I'll talk about it. So once the IPO is done, all the hype is done, then my stock goes into the accumulation phase. So in the green, if you see, this is accumulation phase where the stock is not moving in a trend direction, basically within the channel, and it has a equal high, or it can move into the ascending triangle fashion, or it can be in some other form, but it is not trending. It's moving in a sideways direction, and it moves like for a couple of days, like say, uh, 50 days, 90 days. So if you see on the weekly chart, it goes into sideways like for 1 year, 2 years, sometimes 5, 10 years. We will see in the chart. But this phase is called accumulation phase. So this is where the smart money buys, and all the retail people thinks that this stock never goes up, and they keep on selling this phase. Yeah, I think all are aware of this phase. And once the breakout happen, so this is where the trending phase start. So as you can see on this screen, the market structure changes. It gives the higher high, higher low sequence. So this is where the trend phase is. And after the trend phase, generally one leg up, followed by the reaccumulation phase start. So in this phase, stock generally after the uptrend phase, it generally goes in a sideways. Maybe you can say that after little pullback around maybe 50-day moving average or something like that, it goes into sideways phase, same as the accumulation phase, and the typical sideways action is more than 90 days. So after the reaccumulation phase, again the trend phase start, and once the smart money done with that, then the distribution phase start, where the price is again a similar fashion as the accumulation phase. It moves in a sideways direction, and instead of breaking out, it breaks down. So this is a phase where the uh, downtrend start. This is phase called as a downtrend, where the each high is getting lower and each low is getting lower. So higher low and uh, lower low sequence is formed here, and price correct like 50, 60, 70%, and after that again the reaccumulation phase start. So this is a typical cycle behavior for every stock. So this is happen with everything, every stock. I would like to go into the trading view and show the chart with the example. So let's go to the chart now. So currently I'm on Nvidia chart. Let's go really deep. I'm on weekly time frame, and yeah, let's start from here. This phase. If you see, we have a uptrend here, and we have a pullback. So this is a phase where price move in a sideways. For how many days? It was like 275 days. It moved in a sideways, and after the breakout, it made it goes into the trend phase. So this is a trend phase. This trend phase, and after the trend phase, it made a around how much percent move? It made a 200% move, and after that it again goes into the sideways. So this is where the sideways, or we can say this is a reaccumulation phase start. So if you see, typical characteristic is price is within the channel. It's not going in a uptrend. Basically within this channel it's trending, and this was the like again 287 days. Okay, so after the 287 days we have a breakout, clean breakout, and we again started moving up into the trend phase. So this trend last about 231 days. Yeah, again here after the trend phase. So if you see here, this was a distribution phase where price did not go up much. After this up move, it was like stuck here 238 days, and we went down. So this was a downtrend, not much, but still a downtrend of we can say 50-60% on a weekly time frame. It's a lot. Uh, yeah, and then here is the reaccumulation phase started. So this is where the price were ranging of 252 days, and then if you see again a uptrend start, and then again a reaccumulation. So this was a reaccumulation phase. Price again 233 days, it was in sideways channel, then again uptrend. Yeah, it still goes on. So this was a accumulation again. This was accumulation followed by uptrend. Now this is a current price action I would like to highlight. So what happened here? This was the low end of the accumulation. This is where the accumulation happened. This is like how many days? 217 days. And finally we have a breakout last week. And as long as price is above this region, yeah, we can have a breakout again. 100 to 100% rally, we never know. But in case we make a fake out to downside, then the reaccumulation phase again it will start. So I hope you got idea about all these phases itself. So first strategy is uh, accumulation breakout. So I have one strategy called as accumulation breakout. So strategy is look like this. After a heavy downtrend, so let's consider this. So after a heavy downtrend, price goes in a sideway, and after this downtrend, the breakout happen. So we are no more ranging, and this was a breakout. So this was the example of a breakout. So this is called as accumulation breakout. After the downtrend, I don't want to buy the accumulation low. So this is the accumulation low. Because it's a downtrend, I don't want to buy, but a buy is above the breakout of this candle. So this is on the weekly time frame. I would really would like to view the market on a weekly time frame to see what is happening, and on a I would like to switch on a daily time frame. So this is a daily time frame, and I would like to go in on a daily time frame on a retest. So this was a breakout retest. So this will be my entry, and my stop loss is below the day low. So I always look keep a stop loss at the day low because of the risk to reward. I want my risk I want to give 1 hour risk, but whenever I am good or whenever price goes in my favor, I would like to capture 5 hour, 10 hour, like that. I would like to capture. So, um, so this is one of the strategy called as accumulation breakout. So before that, the nuances of this accumulation, I would like to highlight that. So whenever the price goes in a range, so let's consider this as a range, and price is moving in a certain pattern, equal high and equal low. So whenever this happen, I would like to see this low is taken out by the market. So all the buyers participant taken out or make a fake out of this range, then reclaim back this range, and after that it goes up. So I would like to see this characteristic for buying up breakout. So let's consider the example. So if you see, this is where the range happen. If you, and this is considered as a failed breakout towards the downside. This is a failed breakout. Price reclaim back test this as a support, and then it goes up. So I really would like to see all the buyers which is buying at the low is taken out by market, and then after that it goes up. Yeah, that's about one of the strategy. Quite simple. For the risk to reward, how do I follow? So I use the TradingView tool called as long position tool. So this is a long position, and if you see, if you go into the setting, here you have to put your account size. Let's say I have 100K, and here I would like to keep a risk. Generally, I keep 1% or 2% of the risk. Maybe if you consider 2% risk, then based on the stop loss, it will automatically calculate the position size. So if you see this quantity, so this tool telling me that I have to buy 1408 quantity of Nvidia at this price, and if my stop loss get it, I will lose 2% of my equity. So this is a really good way to calculate the quantity. In this way, you manage the risk. You don't get emotional with your position size. If it too high or too much, then you will not able to execute. So this is what this is quite important basically. I always follow this one or 2% risk, and I use a TradingView tool for this. This is quite simple. Anyone can execute, but risk to reward is quite massive. For the target, I would like to highlight the target. So let's say we are here. So this is a accumulation phase, and I would like to see on the left hand side. So on the left hand side, if you see, uh, we don't have any significant resistance apart from this, right? So we have a straight downward move, then this is a down trend, then we went down. So I would like to look towards the left hand side and see where are the resistances, and then based on that I would like to decide my take profit. So I have a fixed stop loss, which is a day low. I have a fixed target, not fixed, but I would like to see the towards the left hand side, where is where is the resistance, and then this trade could have been 1:9 trade. So even if you lose like 4 5 trade, you will be making a lot of money with such a strategy. So let's look at all the example. So this is one of the example where if I buy the breakout, let's say I bought the breakout here, I kept a stop loss of the day low here, then this could have been win. Let's look at this one. So this is a breakout, good breakout, stop loss day low. This is a day low stop loss, and now we don't have any price action towards the left hand side, right? So in this case, I would like to use a Fibonacci tool, and basically the major move which we talks a lot. So I would like to draw the Fib from high point to the low point, and generally price is react to this level and this level. So let me check to the logarithmic scale so you can see clearly. So this could have been your entry, and your target is 1.161.8. This is the first target, which will give me 1:3, and the second target is 261.8 extension. So this is a second target. For the risk management perspective, once your target reach at 161.8, you can book a half profit, and basically, as it's all at the all-time high, you can ride the trend and move your stop loss to break even. But only I would like to keep on achieving at the 161.8. So that's the rule I have, and you can move your stop loss to break even in this case. So the another strategy is um, reaccumulation breakout, or buying the low of the reaccumulation. The second strategy is reaccumulation, buying low part of the range. Okay, so what this strategy is? So this is the second strategy. Basically, I would like to see the strong uptrend. So if you see, this is a strong uptrend, and I would like to see price go in a sideways channel. So this is a sideways channel, and let's say price is here, and then price is not moving towards the upside. It's a equal high basically, and yeah, as I explained, the characteristic of range bound environment, basically it's a equal high and equal low. As long as price is making equal high equal low, I'm not interested. I'm interested only once these buyers, all the buyers taken out by the market. So this is a down move, but it's a fail breakdown towards the downside. Again, if you see candlestick on a daily time frame, so this is a huge candle, bullish engulfing candle. Basically, it's suggesting that we have a fail breakdown towards the downside. In such a case, only when we have a strong uptrend and we have a reaccumulation phase, then I wanted to buy at the low end of the reaccumulation phase. So this would be my entry trigger. My stop loss go always a day low. So this is a day low stop loss, and I would like to target the range high. So this is a range high. Basically, you could have this is the price action of the last, could have got really good target here, 1:3. Uh, Yeah, and in the video, if you saw my video, I gave a buy here around 195. Why I gave a buy? Because it's a simple, same, right? So it was price were in range between 197, 169. We had a breakout, then a retest, and then above the this high, I wanted to buy basically. So retest buy, you can buy keeping a small stop, and you are riding the trend now. You could have achieved 1:4 if you saw my video about buying at the 195. I gave exact buy. I posted in the group also. So same strategy. This is the breakout strategy, and this is a buying a low end of the range basically. So the third uh, this is a reaccumulation breakout. The second is a reaccumulation breakout, and the third one is buying a low end of the reaccumulation. Uh, for the buying a low, just keep in mind that we have to take out, our market has to take out all these low equal lows, and market really have to reclaim back this range. On a daily time frame, you have to see the bullish candlestick on a daily time frame for entering the trend, and stop loss always go to the day low of the of that bar.